Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 8th of April, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the second week of April. And these two pairs are inversely correlated. And as we see, gold trying to push up higher, while dollar yen was dipping lower until towards the end of the week. It managed to climb back up. And spot gold markets were closed on Friday, on Good Friday. So it will resume on Monday. And we'll see whether the retracement will continue for both of these pairs. One retracing lower, one retracing up higher. And the key news last week was triggered by the US PMI figures, especially manufacturing. Started off with manufacturing and then followed with services, which dragged the which came out lower than expected and dragged the US dollar index down. So that's why the spot gold was pushing up higher until it peaked just above 2030. And then pull back lower on Friday with better than expected non-farm payroll jobs added on a quiet low liquidity Friday for the US market. And that helped the US dollar to try to recover. So we'll see whether that is going to continue from the start of next week. Right. Meanwhile, let's take a look at the highlights from last week and then what to expect for this coming week. So right from the start of the week, the manufacturing PMIs came out lower than expected on Monday, and that triggered the US dollar lower already right from the start of the week. And the surprising figure was for services on Wednesday, where it was expected to be, it has been quite high for the past few months, but surprisingly it fell lower than expected at just 51 versus expectation of about 54. Then this triggered further weakness until Friday, where the non-farm payroll figure came out better than expected. So this helped the slight retracement higher for the US dollar. And surprise for the week was the RBA, where they did not increase rate. They were expected to increase by 0.25%, but they decided to pause and remain at 3.6. So that move triggered a weaker Aussie dollar. And we'll see whether it's going to weaken further for this coming week. And this week is mainly looking at inflation figures with CPI on Wednesday, followed by the PPI. There's also the FOMC meeting minutes from the last meeting last month. And on Friday, retail sales is always a key indicator for the economy as well. And also watch out that on Monday, there should be also low liquidity with a long weekend holiday for the Eurozone, some countries in Eurozone, UK and Australia. Falling Good Friday, there's also Easter Monday holiday. All right, so we'll take a look at the US dollar index and to see how the US dollar fared against the major currencies. But for now, let's return to the other majors. Let's take a look at the spot gold. where markets were closed on Friday, so it was no trading on the Friday. So this move was already started on Monday with the ISM manufacturing figures, and which came out weaker than expected, and started with a dip lower at the start of the day to down to 1950. It did try to break down below the triangle, but recovered with the poor news from the US and closed above the upper trend line. Followed through on the Tuesday, a strong move on the Tuesday, and then paused on the Wednesday, even with the weaker ISM services figures after peaking above 2032. And then on Thursday, after this doji, it retraced back lower with even before the non-farm payroll news, which was also weaker, better than expected. So this could see a gap down at the start of the next week, and it could fall further down into the 1975 level. So we'll see if this 2000 will hold, but it's likely going to be broken first. Let's see how far it's going to retrace lower, and if it's able to recover back to the 2000 level. So below that, there's another support, of course, at the 1950, which was also tested already. Okay, so this week is basically exposed to the key news of the CPI inflation figure on Wednesday. We'll see whether the US inflation figure is still high. It could slow down slightly, but we'll see how far it is still from the 2% target. Okay, let's switch over to US dollar index to see how that fared in correlation with the spot gold. Here's the DXY. And right from the start of the week, it already weakened after a gap up, actually, at the start of the week, and fell throughout the day, falling below the engulfing the previous few days of a bearish move, and basically a continuation, turns out to be a continuation, and broke below this lower trend line. And that's why there was a further weakness on the Tuesday. And finally did almost hit the 101 round figure. That will be a key support, managed to recover back on the Wednesday, even with worse than expected ISM services figures. And then on the Friday, recovered on the non-farm payroll figures, jobs added, which was better than expected. So let's move this down to support level here at the 101. And for now, let's move this down to the 62 FIP retracement level. Key support, key resistance is still up there, but we could see another key one here at the 103, where the daily 55 is coming down. That's right at the 50 pips retracement area. So it's a critical one for the week because it has dipped lower, broken below the trend line, came up to retest. And we'll see if there's going to be a continuation move or whether it's able to break through the 102 and get to the next fib for attempting to climb out even further if possible. It could be rejected here, but it could also still find support and form a higher low and either consolidate within a channel. But we'll see how fast this will form until the CPI figure is released. All right, so some key news for the US and US dollar. So something to watch out for on the US dollar index and the related major currencies. All right, and on the weekly time frame, and it's still a bearish close, although it did find support from the 101. So it is possible that it could dip lower first, and we'll see how much support there is to form a higher low. Okay, let's move back to the other major pairs and review how they would likely react to the upcoming US dollar news. Before we move on to dollar against Japanese yen, let's take a quick look on the weekly time frame, and it's still fairly bullish close, although it has equal length with wicks on either side. So it could just consolidate first for the week. All right, let's take a look at the dollar against Japanese yen. And started weak straight away after failing to break above the daily 200 EMA and the 50-fib resistance zone here, and fell because of the ISM manufacturing figures as well. Continued to weaken until the Wednesday and managed to find some support and started to climb back up on the Thursday, and then on Friday with better than expected non-farm payroll jobs added. So there is some hope for a recovery after previous week's support and bounce off the 130 round figure. So let's see how far it's able to recover for this coming week. Key resistance is still at the 200 EMA and the 50-fib. There's this interim support zone here still, the 786. And of course, the critical support is at the 130 that has to hold. And we can add a rising trend line. Okay. So critical one with a lot of the US news coming up, especially the CPI figure. So dollar yen and the yen pairs, yen crosses are going to be quite volatile. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.